Hello and welcome back to another edition of Buy or Sell, coming to you from the No Holds Bar here at Equity Mates HQ. I'm your host, Adam Keily, widely regarded as one of the simplest minds in finance. Luckily for us, I'm joined by an expert to educate me and hopefully you on how they're thinking about stocks and the stocks they're thinking about, but this is not a deep dive. We're going to get through as many stocks as we can in the time that we've got. And today, I am very pleased to welcome into the No Holds Bar Gary Rollo, Portfolio Manager of the Montgomery Small Companies Fund at Montgomery Investment Management. I got all that out, Gary. Welcome.
Almost got it all out, yes. I'm very glad to be here. Thank you.
It's lovely to have you. Gary, it is a tradition here in the No Holds Bar that we start with a signature cocktail that we like to offer our guests. We'll start with a drink. And this week, the signature cocktail is the Mai Tai Ro, in honour of talking about Tyro Payments a bit later on. See what I did there?
Very good, very good. Well, that places a high bar for the cocktail for later, so well done. We like that.
What's your poison? What's your drink of choice?
You know, I'm going to disappoint my Scottish heritage
Ooh.
and not go for whiskey. I'm going to go for a spicy margarita. So if you can have one of those lined up for later, I'll be onto it.
I did not pick that, and that's on me. I was stereotyping, and I apologise. All right, let's get into some really interesting stocks to look at today. So let's get stuck in. All right, kicking off today's show, we are looking at Ingenia Communities Group, ASX INA, currently trading at $4.83. They build holiday parks and over 55 communities, two of my favourite things. Gary, is Ingenia a buy or a sell for you?
Look, we like Ingenia.
Okay.
The big reason we like Ingenia is, old people are a growing market. And who wouldn't want to invest in a growing market, particularly one that's got, some supply side problems. So if we peel it back and we say to ourselves, how many 65-year-olds will there be turning 65 for the first time this year in Australia? Do you know the answer to that question?
No. 100,000.
100,000. Well, not quite as many as that. There's 30,000 every year, and growing. About 4 or 5 years ago, about 16% of the population was 65 plus.
Right.
It'll be 22% by the time we get to 2026.
Right.
So the market for old people is booming.
Okay.
And what do we know about old people?
Bad drivers.
Bad drivers? Well, let me dig you out that hole. They've got lots of money.
Yes.
They've got lots of money. These folks have had 30 years of endless house price growth.
Yep.
And Ingenia is their vehicle for converting that money in their house into a great lifestyle. And what they do is they basically buy a house with Ingenia for roughly 70% of the proceeds after they've paid their mortgage off.
Yep.
And then they spend the next 10 years bowling and yogaing or whatever.
Yeah.
And we're trying to work out how they spend that other 30, planning cruises and caravanning around Australia. So it's got phenomenal demand side characteristics, and we know what Australians are like at building houses.
Yeah.
So there's not many houses built in Australia. So there's a combination for you: cracking demand, limited supply, pricing should be good, and that's a theme. We've got
Are we worried about longevity in that space? I feel like there's a
Longevity.
short window of monetizing.
Well, funny you mentioned that. The good news for those over 65-year-olds is we're all lasting longer as well.
Okay, right.
But the even better news for Ingenia investors is we get paid when we sell them the house, and that's how it works. So.
Very good news. Old people will be around longer.
That's
Excellent. All right, that's a buy. Next, Gary, we're looking at Iress Limited, ASX IRE, currently $8.01. Data breaches, never good for business, never good for the share price either, it turns out. Where are we at with Iress?
Well, Iress is it's a structural sell.
Yep.
Iress has been a business that's been in a growth transition for the last decade. In fact, it's supposed to be a market-leading growth technology stock here in Australia. Yet, if you go and check out the share price, you'll find that it's lower today than it was 10 years ago. Can you name me one market-leading technology stock?
You've got a lot of questions, Gary.
That's a simple question. So they are unique.
Right. Okay.
They're unique.
Yeah.
You know?
No, I can't.
Well, what a huge achievement to be the unique company that has
right.
its share price lower than 10 years ago when you're a market-leading technology company. And I think that gives you the answer. It's not.
Yeah. Okay.
This company's been guilty of under-investing in its technology.
Right.
And what we're seeing now is the fruits or otherwise of those poor decisions that it's made over the last 10 years. And investors in that company, it's still trading on north of 20 times earnings. So it's still trading as if it's a growth business. Right. And it's simply proved that it's not. So for us, it's a structural sell, and eventually its customers are just going to get so fed up with the poor technology and leave. And we think there's signs for that.
So this is nothing to, like, because they were in the news recently. They had some data leakage issues.
Sure.
Sprung a leak. We're not thinking about that here. This is just track record.
Yeah, bad track record of investment, and it's all coming home to roost. So nothing to do with the near term, but just to do with, we think the options for value creation are really low and valuations really high.
Yeah, cool. All right, so Iress is a sell. Next, we're going to look at another technology company, Superloop Limited, ASX SLC, currently trading at $1.41. I've been a customer ever since my friend told me that they have their own backbone, and I just assumed that to be a good thing. I have no idea what it means. Is Superloop a buy or a sell?
Superloop is a buy for us. It's a very interesting business because its investment fundamentals are actually really strong. So this is a business that can grow, we think, something like 15 to 20% for the next 3 to 5 years, yet it's trading on about 8 times run rate EBITDA. And that's pretty cheap for the growth. Yep. This is a business that's developed a sustainable competitive advantage in a really boring sector of the market. And you've hit on it. They basically arrange your NBN for you. Yeah. But it's those investment characteristics, the fundamentals of the business, that are exciting for us. So, and they got about 4% market share today. Yep. And they're growing market share faster than anyone else in the market. So super fast growth off a low market share base based on a competitive advantage that's sustainable. They have got the lowest cost of operations of all the players out there. And in that market, when you're effectively selling a commodity, that counts. And if you can carry that cost advantage to the market, you can aggregate market share, and that's what's happening.
Yeah, and they're both in retail and corporate, space, aren't they? As opposed to, like a, I don't know, TPG or something. Well, maybe they are too, but that's. My understanding was, when I signed up to them at least, was that they were coming from that kind of, enterprise space into the retail space. Is that fair?
Yeah, that's all true. So the way that they've built their competitive advantage is to effectively use technology to make things cheaper. So they built all the tools that allows them to have that lowest cost position. And they built that for, doesn't matter who you are, whether you're a corporate enterprise or a wholesaler or what we all know as a retailer in the market. And that's given them that advantage, which is driving now market share gains for them.
Yeah, brilliant. Because I really didn't want to have to change ISPs again. So.
Nobody wants to do that, do they? Yeah.
All right, Superloop is a buy. Next up, another NBN retailer, Aussie Broadband Limited, ASX ABB, currently trading at $3.44. Not a lot of faith, I don't think, these guys. They've just got regulatory approval to buy 19% of Superloop shares. Are they just doing what I would do in that situation? If my internet's not working, just get another internet provider.
That's it. That could be right. I like that.
Surely
that's a really
not
good
good sign if you're selling internet and one of your biggest shareholdings is another internet provider.
Well, that's what made us talk about these companies back to back. Okay. So ABB for us is a sell. Okay. Now, this is a business that's done really well in the last 3 or 4 years. They've actually built themselves about an 8.5% market share out there. So they're successful in what they do, but their competitive advantage of offering, a decent service, when you call up the phone, there's someone there and they're Australian at a reasonable price, that's effectively running out of steam. Yeah. Okay. And so what we've seen in the market in terms of market share changing hands, and we've already talked about this with Superloop, is that Superloop have now got the upper hand in that market. Right. And so as you've identified, ABB, just like you looking to switch your ISP, they've gone out and made a little switch of their own and tried to do a takeover of Superloop. And Superloop's response is where this gets really interesting. Yeah. You can imagine, it was in February, set the scene, on a Sunday evening, ABB goes away and talks to the shareholders of Superloop and says, who wants to sell me a 19% stake? Because we're going to bid for the company at 95 cents. Right. And they do that. And you would think that Superloop's board would say, oh, God, we're in real trouble here. Yeah. Happy days in ABB land. We're high-fiving. We've managed to, acquire a business, or we should be able to acquire a business accretively, and we've put our foot on it by, collecting 19% of the stock. The problem is Superloop's board rejected the bid, and Superloop's management won ABB's biggest customer.
Oh, right.
So that caused a huge shift in earnings from ABB to now Superloop. So we reckon ABB's earnings are going to be cut about 20%, and Superloop's are going to go up about 50% with the change in hands of this contract. And that's what you've seen with the share price. So effectively, ABB's bid for SLC, Superloop, I should say, is dead.
Right.
Because the effect of that transaction and the effect of the deal falling over basically means that ABB's earnings are going to fall. They're going to grow slower.
Yeah.
Their cost of acquiring growth now is higher. So if that's not a good combination.
Yeah.
Whereas for Superloop, their earnings are going to go up. They're going to grow faster, and their cost of acquiring growth now is cheaper.
Right.
And what that means, when given both shares at about the same price, is you should, buy your Loopies and sell your ABBs.
Yeah.
And that's the thesis.
Wow. I just picture when Superloop acquired ABB's biggest customer, that biggest customer is just like the guy that that has that hard drive full of all the movies that you could ever...
I would imagine there were quite a few high fives going around at Superloop when that deal was signed.
Very 100%. Good. All right, let's take a break here. We'll grab another Mai Tyro or a spicy margarita, whatever you like. Hey, if you've got a stock out there and you want to hear your stock on the show, something for us to talk about, we'd love to hear from you. You can use the contact form at equitymates.com or send us a message, contact@equitymates.com. We will be back with more buy or sell right after this. Welcome back. You're listening to Buy or Sell, coming to you from the No Holds Bar. And my expert today is Gary Rollo, portfolio manager of the Montgomery Small Companies Fund at Montgomery Investment Management. And next up, Gary, we're looking at GQG Partners, ASX GQG. Currently $2.52. Now, this may be a dumb question, but why do we buy shares in a fund manager as opposed to giving that fund manager our money to buy the shares with? Like, do they just take our money and then invest it in themselves? Is that...
That's a good question.
It sounds a lot like a Ponzi scheme,
good,
but I'm
good
sure
question.
I'm sure they are not.
We don't want to use the words Ponzi scheme when it's around fund management.
Don't say the P word.
No,
but it's a serious question. So why would I invest in a fund manager and buy shares in that company as opposed to giving that fund manager my money?
So giving the fund manager that money will allow that fund manager to invest that money in their strategy. So in the case of GQG, they're a specialist in global equities.
Right.
And they're also very good at what they do. To buy the fund manager, like we're doing, we're doing is we're accessing the benefits of that guy's talent or that team's talent.
Right.
And so we see the economics flowing from the growth of that business. And it's the growth in that business here that is super attractive to us. And let me run through a couple of things for you that's specific to GQG. So I mentioned GQG, they are a global equities fund manager. That's a massive market.
Yeah.
And if you're facing off a global market like that, that's massive, what it gives you is a long runway for growth. So we think GQG as a stock has a significant growth opportunity ahead of it, because this is a business that's grown about 20% on average per annum for the last 3 years, yet it's only trading on about 13 times earnings, and it gives you a 7% dividend yield.
Oh, right.
That, in investment terms, is a bit like having your growth cake and eating it. All right?
Growth cake.
So you're enjoying yourself there. Now, let me give you a couple of things that we think the market might be missing. We've already identified that GQG are a talented global equities fund manager. That means they perform well.
Yeah.
And guess what? If you perform well, that helps you grow your assets under management. With more assets under management, you get more income and fees.
Yep.
The beauty of a fund management model is they're scalable. It takes just as many fund managers to run 1 billion as it does 10, give or take.
Yeah.
So the incremental revenue all drops through to profits.
Right.
But moreover with GQG, this is a business that has invested in their distribution, their route to market during the downturn. This is basically doing basics for fund management 101, but really well.
Yep.
You perform and you invest in your distribution, you don't let the downturn hold you back from going out and building what's called a pipeline of client money that wants to come and be put into your fund.
Yeah.
You use that downturn to actually keep knocking on the door and showing in how well you're done. And then when the economic climate changes, guess what? Clients are more comfortable putting money to work, and they pick you because you've done a good job and you've built the pipeline well.
Right. So that's a buy.
That's a buy. Simple as that. Do the
Simple
basics
as
well,
that, yeah.
and you will make money in fund management.
All right. GQG is a buy. Next up, we're looking at Data3 Limited, ASX DTL, currently trading at $7.97. Doing my research, Gary, as I do, I read about a European company called Data4.
Data4.
Are we worried that Data3 may be obsolete now?
That's very good. I want you to send me that. That's a fantastic piece of observation. That's probably the best research I've ever seen on Data3. Okay.
Well, buy or sell for Data3?
First of all, let me be clear. Data3 for us is a sell.
Okay.
And look, this isn't a bad business. We just think the market's overestimating the growth opportunity and way overpaying.
Okay.
And so this is a business that's on, I think, 28 times earnings. And normally, if you have such a high PE multiple, the higher the PE multiple, the faster the growth the company's got to deliver to justify it.
Yeah.
Normally, that's the multiple that's reserved for a high-growth, scalable technology business. This is a business that's an IT services provider.
Yeah, right.
Now, that's a modest growth market, and there is no real scale. So effectively, we think the market is way overestimating the growth available here to this business.
Yeah.
And we've actually seen some evidence recently that the company's struggling to deliver the growth that investors are expecting. In its most recent update, it told everyone a few weeks before, well, we've got an upgrade for you. But when we got the numbers, the upgrade actually came from the fact that interest rates had gone up on their cash pile. Everyone's looking at it going, hang on, we're investing in the business here.
Nailed it.
Yeah. Wow, you're super talented. You've got like a higher income coming from your cash pile.
Yeah, yeah.
So, look,
Right.
the business just can't grow fast enough for us to justify that multiple. It's not a bad business, but we think it's not a good investment. So for us, it's a sell.
And they're an Aussie company. Are they a global player, or are they just playing in the Aussie space?
They've got a great business here, market share-wise, in the Aussie space.
Yep.
They're one of Microsoft's biggest resellers.
Yeah, okay.
And, of course, Microsoft's going to be around for, it's one of these forever type opportunities, right? So we wouldn't want to question the quality of the business.
Yep.
We'd just question the quality of its growth.
Yeah, sure.
And the valuation you're paying for it.
All right. Data3's a sell.
Data3's a sell.
So I'm from Adelaide, which is why it's data as opposed to data. All right, next up, we are looking at Neuren Pharmaceuticals Limited, ASX NEU, currently trading at $21.64. Jumped 16% last Monday on new drugs, but then the come down on Tuesday, dropping 12%. Buy or a sell for Neuren?
Look, we like Neuren. We think it's a buy.
Okay.
Look, this is a little complicated, so stay with me. We think it's worth it.
Okay.
This is a business that develops drugs, as you've pointed out. Now, normally in big markets with lots of patients, the economic forces mean that it's always an attractive market for drug developers.
Hang on, are we saying patients as in they're prepared to wait, or they've got a lot of patience as?
Unfortunately, in this market, these patients have been waiting.
Right, okay, gotcha.
But we're talking about patients as in ill people.
Yes, okay.
And the economics of the drug market is the bigger the population, the more likely drug companies are going to want to develop therapies for those conditions, because big market equals big incentive to develop drugs.
Yeah.
But in small patient population markets, that incentive, it just doesn't work at all, because if you've only got 5,000 sufferers, in this case of a problem called Rett syndrome, which is an awful disease, that incentive isn't there. But the regulators have thought of that, and the regulators have created something called an orphan drug designation, and the rules in those markets are a little different, and we're not going to spend all the time explaining why here, but in effect it means that if you get there first, your ability to win in that market is much more improved than normal.
Right.
And that's what Neuren have got. They've got some drugs that have got to market first. And their first one out the door was a drug called Debut. And that has been a huge success in delivering, who would have thought, when you are the only therapy that's been available in a market where there's been no drugs, guess what? It has an enormous uptake very quickly.
Right.
So that's one of the benefits of being in these types of markets. But moreover, in Neuren's portfolio, they've got more drugs which are going along the same axis of technology innovation to solve more problems.
Yeah.
And that's where we think it's really interesting. Yes, the shares have done well on the announcement of some outcomes, but we think there's many more to come. So this could be a platform drug technology for many of these small growth markets. And remember, if you're first in, you win, and you win well for a long time.
And so you mentioned they've got the drugs to market already, so they've sort of passed through those barriers that often, a bit like the mining speculation or, other pharmaceutical speculation where things might not pan out, so that you're saying they're already in the market and they've got more on the way. Is there any risk that those other drugs won't make it, or, is that a risk?
I'm glad you introduced the word risk there, because this is a high risk reward type scenario. Yeah. We're talking about drug development.
Yeah.
They've got to market with the first one. Yeah. And what that does, if you think about the next ones along and you think about how the stock market values these types of things, it values them as options. And the more evidence you can provide that future option could be worth something, guess what? It starts to price that in. And that's what we're starting to see at Neuren.
Right.
But when we look at how the market's pricing it, yes, you've priced in the success of debut, the first one, but you haven't really priced in the likelihood or probability of success in the future ones coming through. And that's the thing as a fund manager that we look for, optionality that's not in the price.
Yeah.
And so that's what we've got with Neuren.
Neuren is a buy. All right, it is time for the last call here in the No Holds Bar, and we're looking at Tyro Payments, ASX TYR, currently 81 cents. Bit of speculation about a takeover of Tyro, I was reading. They rejected an offer from Potentia. Apparently everyone was keen, but they couldn't work out how to make the payments. Terrible joke to finish with, Gary. Buy or sell for Tyro?
Well, first of all, let me say I think you've done your research well. So for a comedian, you've got talent, and we need to talk.
Yes,
we need to talk.
Yes, absolutely.
Okay,
definitely didn't just take the first Google hit. Let's make that really clear.
Well, let's talk a little bit about Tyro, and we need to sort of come back to where it's come from. Tyro was brought to market by some technology celebrities, let's call them.
Okay.
And it was supposed to be a high growth business with strong, sustainable competitive advantage.
Yep.
It didn't quite turn out that way, because the competitive advantage was based around, being able to add a tip to a bill. And to be fair, when it turns up, that's a new thing, but it's not sustainable.
Yeah.
And so what we've actually had happen is a tale of woe. Right. The reality is the market that Tyro's facing off in is actually competitive and pretty low growth.
Who are its competitors in
the big banks?
Right. Okay.
Yeah. If you're going to pick on someone in Australia to be a competitor, we like the banks to be slow moving, but guess what? They're pretty hard to beat too.
Yeah.
Right. So that's what happened. That's what's got us to where we've got to. But the company has recognized that things have changed and Plan A didn't work.
Yeah.
And they've actually brought in new management. But I think there's a famous quote from Warren Buffett. I might have it wrong. It goes something like this, is that, bringing in a brilliant management team versus the poor economic fundamentals of a business, it's the reputation of the business that sort of is unchanged at the end. And unfortunately, we think that's going to play out here. And there's another negative catalyst event coming up. Tyro have gone to market with a partner called Lightspeed. And Lightspeed are the guys, when you go in the morning and you're tapping for your coffee, the person who's ringing up the coffee on the till is using a point of sale system. Yeah. And Lightspeed are the providers of that point of sale system in many cases. And Lightspeed are getting into the payments business. And a very, very large part of Tyro's install base is also Lightspeed customers. And guess what? They're bundling it in.
Right.
And that's a bad day out for Tyro.
Yeah. So are we looking at a takeover? I mean, they rejected Potentia's bid, but is Lightspeed going to look at taking over Tyro, or do they have their own tech already? They don't need it?
Well, they're bringing their own tech to the table. And so it's hard to tell what everyone needs. And I wouldn't want to rule out the fact that Tyro gets potentially taken over. Yeah. But if you were a potential someone looking to buy Tyro, wouldn't you wait for some of the outcomes of competition to crystallize first? So we think that's a more likely scenario, is that we definitely see the impacts of competition that we see coming.
Yep.
So Tyro, for us, it's a sell, even though the management team are doing a heck of a better job than what we had before.
All right, it is a sell, and that is it for us here in the No Holds Bar. Gary, thank you so much for coming in. It's been an absolute pleasure.
I've really enjoyed it. Thank you so much, and I'm super impressed with the work that you've done in preparation. Well done.
That's the least I could do. Hey, where can people find you if they'd like to hear more from you or read more from you, if you've got anything you'd like to share?
Sure. Well, our fund, we prepare a monthly newsletter for clients, or for anyone who wants to come and visit our website. We can be found on montinvest.com, and we run the Montgomery Small Companies Fund.
Brilliant. Well, has been an absolute pleasure. Thank you out there for joining us. And don't forget, you can find us on YouTube as well as all your podcast platforms. I hope you'll join me next time when we jump back into the No Holds Bar. It is bye for now.